Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq. Joining us for this segment, we have Sanjana Prabhakar, Index Research Specialist with Nasdaq Investment Intelligence, to discuss an index that provides exposure to the companies in the wind industry. Sanjana, it's great to see you as always. Welcome back to Trade Talks. Give us a brief overview of what the wind industry actually is.
Sure, Jill. So very quickly, a preview of the wind energy industry. Today, there are 72,000 wind turbines installed in the US, which generate about 9% of the nation's electricity. And this is likely to grow to a large number. As per a study by the National Renewable Energy Lab, between 40 and 60% of the total electricity by 2030 will be accounted for by solar and wind. So that gives you an idea for how fast this is going to expand going forward. In terms of capacity, 2022 was the third best year ever in terms of growth, and the industry added about 78 gigawatts of capacity globally. But the industry did go through a period of challenges due to the pressure from high inflation, high logistical costs, and sort of inefficient permitting and licensing rules. So the last couple of years, we did see the industry go through a challenging environment. But what's worth noting is that the policy environment has become very favorable for the industry long term due to the passage of the Inflation Reduction Act, which we have highlighted before. And after years of delays, we expect the offshore wind industry to gain momentum.
Tell us about the index itself and what composes of it. What types of companies are in it?
Sure. So the index that we're looking at is the ISC Clean Edge Global Wind Energy Index, ticker GWE. And this index actually tracks companies that are actively involved in the wind energy industry. And these companies are likely to see increased demand going forward due to corporations now trying to meet ESG targets. And they're also likely to benefit from the IRA, which could lead to $160 billion of investments in offshore wind, doubling installed capacity over the next decade to 280 gigawatts. And as you can see in the first slide here, the index is tilted heavily towards the top 20 companies, which comprise 70% of the index weights. Some of these companies might be familiar to you. We have Vestas Wind Systems, Ørsted. These are pure play wind energy companies. You have power generation companies such as Northland Power, Siemens Energy, and even diversified technology companies such as General Electric. And just a bit of color in these companies, Vestas is actually the leading incumbent in the wind energy space with an index weight of 7.5%, and they have about 154 wind turbines across the globe. And then you have a company such as Siemens, which operates as a renewable energy company with an index weight of 2.4%.
How about index returns? How has it performed, relative to what was the challenging 2022?
Yeah, and as you can see in the slide here, in the chart to the left, only 4 out of 20 companies were up in fiscal year 2022, largely due to pressures from high inflation, high interest rates, and supply chain challenges. So you see the top 20 names were down 9.8% on average, and they were largely dragged down by 4 players, which were down almost 32% on average. And some of the biggest makers of wind turbines, Siemens, GE, and Vestas, had a pretty challenging 2022, reporting losses and largely due to geopolitical uncertainty and high inflation. But what's encouraging is that these losses have largely reversed this year. You see the index up 8.9%, and that's been led by very strong performance from these leading players, General Electric, Siemens Energy, and Enel. And actually, as per a very recent report that came out in February, Siemens announced plans to reopen 2 turbine component factories, citing benefits from the Inflation Reduction Act. And you have Vestas, Siemens, and GE, which have also made plans to build new turbine component factories in New York and New Jersey, contingent upon federal funding. So the number that you see there, 13 out of 20 companies were able to post positive returns year to date. And that suggests that some of the headwinds that drag the industry down have receded and investor sentiment has sort of improved. And just a quick note on the chart to the right, when you look at the year-to-date performance, you see the GW index, which has outperformed other competitor index products, up 3.3% year-to-date, which is very encouraging.
What about market cap exposure?
Sure. As you can see in slide 3 here, 56% of the index weight is tied to companies which are large cap with a market cap of greater than 10 billion. So think of some of the largest players that I mentioned, General Electric, Siemens, Investors. And as a subgroup, large cap companies showed a dramatic reversal from the previous year, up 11% year to date from losses of 10.6% last year. And what's worth noting is that GE's performance, year to date performance of 52% largely contributed to this reversal. And if you look at mid-cap companies, which make up 34% of the index weight, you see they did not struggle as much as the other two groups and actually eked out modest gains of 2.5% this year. And if you look at small cap, which make up 9.5% of the index weight, it registered the steepest declines last year, down 17.2%. Declines ran rather deep as all but 5 participants registered double-digit losses.
And finally, what does it look like when we think about industry exposure?
Sure. And if you look at this slide here, you see 59% of the index weight is tied to companies in the utilities industry. As a subgroup, they were down 6% in fiscal year 2022, outperforming on a relative basis basic materials and energy while underperforming industrials. This year, the industry has dragged down all other subgroups. If you look at energy, with an index weight of 23%, it significantly underperformed the other two buckets in fiscal year 2022, down 27% last year while registering gains of 4.4% this year. And what's worth noting here is that basic materials and industrials with a combined weight of 19% have largely recovered their losses from the previous year. You see basic materials up 19%, outperforming all other subgroups.
All right, Sanjana, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Sure, Jill. Thank you very much.